Have you ever spotted a perfect trade setup for which you had huge conviction, tried to quickly get in, and yet still missed the trade? There's nothing worse than spotting a great trade, having strong confidence in it, and yet finding yourself sitting on the sidelines, incredibly frustrated. And you see all the profit you could have made just piling up, but without you. The reason this happens, more than it should, is that most traders don't have solid trade execution skills that come from knowing how to use different order types in different situations. If all you typically use are limit and market orders, you might have this problem without even knowing it. So watch this video if you want to learn how to enter more effectively like we do as professional traders and stop missing these great moves.
So today we're here to talk about a question that comes up a lot on the desk, and we're actually talking about how opportunistic it is that we're talking about it today. It happens to be a topic that's incredibly relevant to our trading today. It's November 10th, 2022. The desk is having a very good day because we had an opportunity come up with the CPI prints and then also the trades that occurred afterwards. So we wanted to take a minute and talk about the importance of order execution and really kind of identify a couple different ways that we can execute as traders or enter positions as traders. This is something where if you don't do this right, you are costing yourself a tremendous amount of P&L in any one given opportunity, and then you magnify that over the course of your trading career, and it can be an incredibly costly mistake that really just can redefine the way that you think about opportunity and the way that you execute. What we're really going to talk about today is traders can mistakenly take unnecessary risk by not using the right order types. The skill of efficient trade execution really kind of tends to be this very complex discussion held by traders on our desk. What we've done here is systematically approach the key process we use from going from the most basic order types, that's where we'll start, and we'll build on those to lead to some custom order types and even talk about the situations in which you would use this form of automation on the desk.
So we're going to start with common order types, right? Like paying the offer, bidding into the market. And I think that when we're thinking about these two things, it's really important to understand your setup and the nature of the market that you're trading, because some order types are going to be passive and some are going to be aggressive. And so in the simplest way, when we're talking about bidding, that's going to be a very passive way to enter the market. You're going to let that market come down to you, and you're going to get filled, and you're going to be patient. And when you're paying the offer, you're going to be aggressive. You're going to be paying that offer. You're going to make sure that you get filled. And usually this is going to be when the market's moving, when there's volume coming in, and there's risk of the market moving away from you. So
really what we're going to do is we're going to make sure that we're covering and we're talking about making sure that you know how to use the right order type in the right way. And these are very basic concepts.
Yeah, and we're going to build on that to cover some advanced order types most commonly used to help simplify your decision-making process around a trade or do multiple things at once. And then we'll wrap using automated technology to create custom order types for custom situations.
One thing that we really wanted to cover is all three of these order types and all three of the things that we'll talk about are available and used by traders on our desk every day. An important thing for us is it's not about our technology, it's not about our platform. We actually wanted to make sure that everything we talk about today is available to every trader out there. So before we went and discussed these, we went out and made sure they're available on retail platforms as well. These might be called something different and look a little different depending on the platform you trade, but we wanted to make sure that the core structure of these order types are available to everyone. And finally, as we are sharing these, please remember to find the order types that work best for you. There may be one here that speaks to you and speaks more specifically to your trading style directly, and you'll want to use that order type most of the time. Everything we're talking about here today is a broad overview, and it is situationally specific, but there's going to be one or two of these order types that just absolutely make sense for your trading. And we hope that you'll use this order type for more of your trades and help your edge increase because of this. By the way, if you want to learn the top trading setups we use on the desk, click the link appearing right now to sign up for our free trading workshop. Now back to the video.
We're going to first cover common order types, and we're going to use a GME breakout example. And so we're using this because it's a really great trade. Like, this was a very powerful breakout with a really, really significant level on the higher time frame and a level that was tested on the previous day. And it in this example encapsulates all of these different ways to enter a trade. And so we're just going to start by walking through the common order types. Okay, so like in the beginning of this trade, there's no volume, there's no momentum coming into the stock, but it's holding this very significant level. So
really, just to jump in, when we say significant level, we've actually started to do this on our desk, and it's been very beneficial for us. We're scoring levels out of a 10. So 1 being very insignificant, and really we don't really pay much attention to that level, and 10 being the most significant level possible. So it's not really what we're going to cover today, but just so you guys are aware, when we're talking about the significant level in GME, Garrett and I were speaking with a couple other traders on the desk, and all of us sort of came to the conclusion this was an 8.5 out of 10 level. So we really want to define that more specifically. When we say a significant level, we're scoring it as an 8.5 out of 10. It's not a 10 out of 10. It's not a 6 out of 10, but 8.5 just to get a gauge of how important that level is to us on that higher time frame and then also on the intraday.
yeah, so we have this really great level and we want to get long. So we're going to ask ourselves, how do we get long? Okay, so like we said, there's no volume yet, right? And the price action is kind of whippy. There are a lot of fake outs at this point if you zoom too much in. Like, this is a 5-minute chart. And GME is a spready stock too. Like, you don't want to just be willy-nilly, paying the offer every time it sprays up and stuff like that. You really have to pick your spots. And so this is the first time that it's gotten above the level and held. But other than that, there's nothing significant going on. And that's a really big thing to identify, because what that is going to tell me when I'm trading this is, okay, like, I want to be buying as close to the breakout level as possible. Like, I want to be bidding into this market. I don't want to be paying the spread. I don't want to be paying highs. I don't want to be overanalyzing micro patterns and expecting it to break out until I see confirmation to the upside and until I see volume coming into the stock.
And so what you're talking about is this very passive approach to getting involved in the tape. This is a very passive approach to getting involved in the stock. So with a passive approach that you can take, what you're going to be doing is putting bids out there, typically, kind of near that really significant level, and, letting the stock come to you. You're actually not going to be looking at the spread as much. You're just going to be bidding down kind of towards that level. That's about as passive as you'll see anybody on the desk going, where you're watching the price action, and when you identify, okay, maybe this is coming down to the support area, maybe I see something on the tape that shows that support might hold, I'm going to bid in right there. And you can put a bid, you can put it just below where the current bid is. You can put it even a little below that if you want to, but you're very, very passive with your entry. So you're adding liquidity to the market is what we say, by just putting your bid out there and letting the market come and fill you.
And you may not want to put on tons of risk at this stage in the trade. Like, that's fine. I mean, when I traded this was a point where we were putting on a fraction of the risk that we wanted to put on in the trade, because we're trying to get good prices. We want to let it hold for a longer period of time, and we want to be able to, pick these other moments without just totally, getting upside down in the trade. So we're testing the stock, and we're going to bid in at these levels. And one of my favorite keys, and this is probably the key I use the most, is just a key that throws out a bid on the inside market, right? So that's going to be like the current bid, and that just lets me get filled on the bid at a higher probability if I kind of want to get filled right away. Like we might layer bids, we might put bids like Jeff just said, kind of like under where the market is. But sometimes I'm just hitting the key that just throws a bid right out there, and I'm hoping that I'm going to get filled if I see something on the tape.
This is about as passive as you will see anybody on the desk trade. It's just us recognizing the price action, identifying a setup, and just bidding in. And then if you get hit on the bid, you're actually just offering up. You're putting prices randomly or kind of towards the resistance area, or even if it pops up a little bit, maybe you're selling some of your position. This is us just really getting a feel for it. Imagine if you're at a poker table and everybody just kind of chips in a little bit to get their cards. We look and we kind of fold. We look and we kind of fold. In this case, we're actually getting paid or trying to get paid a little bit just to get a sense of how the stock's moving. So we're not really worried about our P&L in these positions whenever we're trading this way. We're more just trying to get a sense of, okay, it's coming down here. How does it feel? Okay, it's going up. How does it feel? And we're using the kind of wiggles in the price action to get filled on the bid, passively, and get filled on the ask passively as well. That's the most basic sort of approach that we will take. It's usually when we're looking to see something else occur in the tape.
Yeah, and we want to get good prices. So
And we want to get good prices. Yeah, that's right. Yeah.
So it starts to break the pattern and confirm to the upside, right? That's the next stage of the trade. So then we ask ourselves, how do we enter? Okay. And this is kind of in between, right? Because volume hasn't totally entered. It hasn't completely broken out intraday yet, but price is moving now. And we have a little bit more of a sense of urgency. It holds VWAP and starts to break to the upside, right? And this is the right time of day. Like we let it trade sideways for 3 hours at this point, bidding close to that breakout level. Close to VWAP, trying to get good prices. So now we have some good prices, and now we're starting to get more confident in this trade because it's the right time of day. It's starting to confirm to the upside, and it's starting to move a little bit. Okay, you can see on the volume, it's not like tons of volumes rushing in yet, and that's what we're looking for really to get aggressive in this trade. But volume might not rush in until it takes out the high. So we need to be aware of these kind of spots where we want to be adding size, and so when it's above 47.80, which was kind of a minor swing high on this 5-minute chart, like we really want to be thinking about, okay, like what kind of size can we get with a tighter stop? This might be the moment, and we're really watching the tape. And so for me, like sometimes you can get filled on the bid in here, but it's less likely because the stock's moving. So I might be trying the midpoint, trying to get filled in the mid, and that's because mainly because GME is such a spready stock that sometimes you're going to want to do that. But otherwise, I have no problem paying the offer, at this point if I feel like I'm still getting a very good price or I want to, pay that 47.80 when it lifts.
And I'm a much more aggressive trader in a situation like this. I will limit on offer to make sure I'm in. A lot of this is, you can call it FOMO or whatever. I just see the probability of this trade giving me an opportunity to sell it higher. So I will limit on offer. That's where I will switch from that passive buying to being much more aggressive. And I will limit on offer to make sure that I get in. So I'll be bidding right where the ask is, right on the offer, to make sure that I am taking the best prices that are available. And I will be very aggressive getting them. And, I will be very careful with my risk on the other side. If it doesn't really start to do what I expect it to, maybe I'll work out of the position a little bit. And with that, I'll go back to that passive feeling. But when there's a moment where I think that something important might happen, I won't hesitate to be aggressive and go limit on ask or limit on offer.
Yeah, that's great. And sometimes you throw a bid out, you don't get filled, and that tells you something. And then you pay the offer because you're not getting filled. And
Yep.
do that a lot. So this is when the volume comes in. So it breaks this really significant intraday level at 48.50. And you can see on the right that volume comes rushing in. And you could see that on the tape when you're watching the tape. And that 48.50 was big. So now that it's confirming to the upside, we're bigger. We have good prices. At this point, there's nothing that you can do except for pay the offer. Like if you're watching that 48.50 and you see it decrement, and they're paying it and it lifts, and maybe you can get that 48.50, maybe you want to pay for it when it lifts. The only way you're going to get filled is by paying the offer. If you're bidding in at this point, it's going to leave you in the dust. Maybe you get some pullback later that you can start bidding into, but if you're trying to buy this breakout, I think this is a perfect example of when you have to be paying the offer in this situation.
Or even what's called crossing, right? You can even have a specific offset of I'll pay the offer up to whatever, 20 cents above where the current ask is. Because as soon as that volume comes in, this is as high probability as it's going to get for this trade. So you can hit on, you can buy basically on the ask, or you could even cross if needed. Crossing's a little bit like hitting a market order, but on our desk, we don't actually use market orders. One of the things that we really teach traders very early on is don't use your mouse to enter positions. Do that little bit extra work and make sure everything's coded in your keys so that you can be a little more nimble with your keys. We're talking about the difference between pressing, for me, it's Control C, Control G, or Control F. Those are the three different basic order types I have, with Control C being the most basic, where I'm bidding in, Control G being I'm paying right on the ask, and then Control F being I am crossing if I need to, just get me in this stock, right? Like those are three things that I just have programmed on my keyboard. And when we have a trader start and we see them clicking over at the mouse, it might work for when you're getting bid, when you're getting filled on the bid, and it might even work a little bit when you're kind of paying the offer, when you're being that kind of more aggressive. But it's very rarely going to work in that most aggressive scenario. You're going to be clicking, and the market will have moved away from you. So, regardless of your platform, you really do need hotkeys set up. And I think almost every platform offer those now. All you need to do is practice them, and you'll get very comfortable with it and the flow, and you just open up opportunities, because if you miss that third entry and that's your whole trade, you just miss this superior risk reward opportunity. And, this could be a trade that turns into one that makes your day, your week, your month. And if you're sitting there missing it, it's just going to get more and more painful. And on our desk, we're very aware of how missing trades can actually lead to poor trading decisions and ultimately put you on tilt, because you're like, oh, I had what I wanted, but I missed the entry and this and that. And then you start to get frustrated. And so really making sure these order types are set in advance and knowing which order type to use well at a basic level is just a preventative measure to keep you from getting on tilt.
And I want to point out too that this might be your trade. Like, you might not take any of the other trades that we just talked about. You might not be bidding in throughout the course of the 3 hours of holding the level. When it starts to confirm, you're still watching, but you're looking for that moment on the tape, and you just might be scalping it, right? So that might be your thing. As Jeff pointed out earlier, like knowing which execution style works for you. So, I mean, I know people who are just waiting for that tape moment at 48.50, and that's the only thing they're doing. They're paying the offer there, and they're scalping it for a couple points, and that's that's fine.
Just to kind of bring it back, and we'll cover these really quickly as a sum, and then we'll go on to the next kind of more advanced order types. Common order types are bidding into a stock or offering up. When we say that, we mean literally putting bids below the market, or at the bid price, or above the market or at the ask price, in order to get long if we're bidding, or short or exit positions if we're selling. If we're talking about midpoint, every single platform out there has a midpoint key. In a spready stock, you can actually go midpoint, and so you're not guaranteed to fill. If you're using a midpoint key, you are being passive, but you're not as passive as if you're just placing bids down below the market. Midpoint is usually when it's come down and it's a really spready stock. You're not going to pay the ask, but you can improve your stock that way. When we talk about sweeping, that's where you're literally just like, give me the ask and everything above it, I want to get long, or even if you're trying to get short, I'm hitting the bid and I'll take it down to this point. So usually there's an offset, and you do have to pay attention to what your offsets are for everything, so that you can make sure that you're not setting too big of an offset that it's basically a market order. But you do want to make sure that you're giving yourself the room to, if you hit the key and the ask has moved down or the bid's moved up a little bit, you're not going to miss that fill.
Now we'll cover advanced order types. So we'll go back to the GME trade to see how we could have used these. The first one being the time weighted average price. A lot of people call it the TWAP for short. And this is actually the way that we executed this period of the trade when we traded this. And the way that this can be done is usually it's automated. because there are a lot of executions, but you can automate it to say, buy every minute as long as price is below 47.50 and holding 47. So every minute bar that closes that's below 47.50, it's going to buy a certain amount. And you can figure out how much size that would get you if it did buy every minute, and just set it so that that's within reason of what you're okay with. All right. And so again, like, this is kind of a way that we use to passively buy a stock at good prices. We don't have to babysit it, and we don't get wrapped up in overanalyzing the price action before it's too early, right? So if it's holding a level and we want to accumulate the stock, potentially swing something, as long as it's holding that level, this is a good way to get involved, to start the trade out, and then kind of see what develops after that.
It's also a way for, if you're trading it and you want to get to a certain amount of size. Again, this is usually like starter size. So the longer a stock holds above an 8.5 resistance level, the longer it holds that level, actually the better the trade gets. So we don't actually want to predict how long it's going to hold the level. We just think it's going to hold that level. And as long as it is, we want to be kind of more involved in the trade. And so TWAPing in actually will get you bigger and bigger and bigger in this circumstance, the longer the price action holds that level. And again, you always have a max size that you're going to TWAP in, so you know exactly what you're, once it's bought everything, it'll kind of stop buying. But the reality is, you're just letting this trade kind of have its wiggles and make the moves that it's going to do. But you're using the kind of basic, simple technology to get you in and let you feel kind of how strong the stock is and what's going on. Again, getting that starter position established. So it's a good way to you find a level, you find an important area, and you just let the price action talk to you, and you let your TWAP program work, and let your average get built over a period of time.
Next one's a bracket order. A lot of people call it an OCO. What's that stand for, Jeff?
One cancels other, I think.
Yeah. So this is an order where you're buying the stock and you're getting a stop and a target at the same time. And you could have multiple stops and multiple targets, as in this example, at the same time. And so this is great for if you don't want to have to manually manage the trade, if you want to put something in and then go have lunch, and so what it's going to do is when it does trade into those target levels, it's going to scale out at those levels for you, and if it trades below your stop, it's going to get you flat. And so you don't really have to worry after you make this entry. And I think that, like, there are two reasons that I can think of for doing this. I don't do this a lot because I have the luxury of just being on the desk all the time and watching my stocks. But also, like, if you really want to be disciplined with yourself to wait for your targets, sometimes you have to walk away, right? Yep. So that's a good way to do it, I think.
It's a really good way of, using essentially one cancels another. So if your first target gets hit, it can cancel your first stop automatically. If your second target gets hit, it can, whatever you want, but one cancels another. So if you get filled, all of those orders and your stops get put in like instantly, right? It all happens at once. And so if listen, I've been really working on this breakout trade and this is my A+ setup now, and I really want to make sure I'm holding to my target. And even I start to feel this pressure because I know that this trade really could be a good one, but I want to commit myself to this trade fully. Like Garrett said, I think that's a great example for, I really want to commit to this trade all the way. So I know my stops are in the system where they should be. I know that my offers are up where they should be, and I'm just going to let technology help me. And, this is just a little bit more of an advanced order type. It's just building on the things that we spoke of before, but it's an important thing to make sure you're doing if that's been the problem for you. If you've ever sold something too early, if you've ever kind of let it go up and then come back against you and you're worried about letting that happen again, this is a great example of an order type that can be specific to a situation that you're looking to get better at. You're looking to execute more correctly.
Now we have the basket order. I love this one because you can use this on days like today where we had a CPI number and the whole market went up. right? So you might have a bunch of stocks that you want to buy, and you can't go around buying 10 stocks. So you hit one key, and it just buys them all for you at that moment if you have a big inflection point. And so using the GME example actually works because AMC was trading in sympathy to GME at this time. And so if you were to use a basket order in this case, you'd probably want to buy AMC with GME, and you can see here that it worked. So, you could be just watching GME, and you find that moment because AMC is following GME, and you're going to buy both of them. The same key is just going to buy both of them, right?
And basket orders can get super complex, but this is kind of a basic example. You want to have one of these on your keyboard where you understand, okay, I'm trading two stocks with a tremendous amount of sympathy and a tremendous correlation, and maybe GME is your main one, but I want to have 20% of my risk on an AMC as well. If the GME triggers, I expect AMC to run, so I'm going to put on a small amount of risk there. You could say that you want your risk to be inverse. The reality is, it's going to be something that is up to you, but this is a good way to, if you like to have a diversified approach towards trading, basket orders are a great tool. So you can press one button and you can get the best possible execution at the right time for multiple stocks. If not, you're going to have to pull up one ticker, enter the position, pull up another ticker, enter the position. Sometimes that's just not feasible. And you really do want to make sure and have a plan in place for, I can enter multiple stocks at the same time, at the exact same way. And I'm going to make sure that I'm in this trade because I think that, this trade is going to lead to this trade and these trades all correlate. And it's going to be a good opportunity for me to really put some good risk on.
Yeah. And if you're making this trade, like you said, it's going to be correlated. So you have to make sure that you understand that this is basically one position.
Correct.
Like your risk is.
Yeah, that's the one thing that's how basket trades get really complex is you're actually adding a tremendous amount of volatility to your position. And you have to be very careful and very aware how much volatility you're adding to your position by spreading that risk across. We're not saying, okay, I'm risking 80% of my daily stop in this position and 50% of my daily stop in this position. That's not the way that we do it. But if it's something where I'm risking 20% of my daily stop in this GME and then 10% in AMC, or I'm risking 40% in GME and then 15 or 20% in AMC, but I've been waiting for this opportunity all day, it's a really good way to do both at the same time.
So example 3, we'll do automated order types. So again, with the GME example, I think there's a great moment where we could use a sequential order. And what this is just, it's any type of script that you can write into the execution that changes throughout the trade, right? So in this case, it's a trailing stop. And so for every 5-minute bar that gets printed, the stop gets raised to the low of the prior bar. And it actually worked fantastic on this trade. It doesn't always work like this, and you have to kind of know for this specific thing, the time frame that your trade's working on. But I know a lot of the guys on our desk have been experimenting with the 2-minute bars and doing this, and I'm actually writing a script that's with somebody else that's actually going to attempt to do this on 2-minute bars and just kind of see what that gives us. So, a lot of these sort of advanced order types using technology, like it's fun. It can be very creative because you could just have an idea of, hey, I want to raise the stop this way in order to stay in the trade. Let's see if we can figure this out. And sometimes it really helps.
And a lot of this is kind of like Garrett said, the fun part of trading for us. We study our A+ opportunities, and we don't study them once. We try and get 5 to 10 reps of every A+ opportunity we get. So in doing those reps, we start to notice these little things about the way stocks trade. It can be, it doesn't make a new 5-minute low for a significant period of time, kind of until that momentum move is done. Oh, you know what? I bet you I could build a sequential order key where I hit an entry. It actually sets my initial stop for me, but then as the price action works, it just trails my stop up through the move. So that's a really good way of just saying, I know that I've sold too early too many times. And we don't sit there and get frustrated that, I sold too early again. This sucks. I'm never going to make it as a trader, blah, blah, blah. That's just not constructive at all. And on our desk, our psychology of every individual is really to try and be as constructive as possible. So what do? You say, I sold too early. How do I learn from that? Oh, interesting. Let me review this trade. Let me study what actually I could have done differently. And maybe this is the sort of key that you could put into place. And you could say, you know what? I'm not going to sell too early this time because I'm going to let that stock go all the way up until it finds a real resistance area. And then I know that 5-minute low is going to take me out whenever it gets there. And yeah, sometimes it'll be the right move. Sometimes you'll have to learn from it and improve. But these sequential order types are really situational specific and ones that you really want to make sure you understand why the stock is trading the way it is and what really should happen. And then you could come up with any sequential order type you want. Maybe it's something like, I only want to trail it. I want it to trail on the 9 EMA. Okay, that's a very simple one. The 5-minute low, that's a very straightforward one. These things are not that complex, but if you systematize each step along the process, what you're going to wind up with is this powerful way for executing and staying in your A+ opportunities. And that's really the core of what we're trying to do every day is study our A+ opportunities. Be creative with how can we make sure that we A, don't miss those opportunities, and B, really make the most of them by using different sorts of technology in order to make sure that we're capturing the core of the opportunity that's presented to us. At the end of the day, this is one of the best and the most efficient ways to automate your trading. Using better and more effective order entries is really the low-hanging fruit that can make a huge impact on your trading business. Even if you invest a small amount of time to understand the first steps and then start to take those through all the way to the final steps we talked about today.
Yeah, and so this can be creative. Like we just talked about, it's really fun to come up with new stuff, right? And we like to share them on the desk. So we'd like to challenge all the traders to share custom order types that they may create for specific situations and, in the community.
So now you know how to use different order types effectively, like professional traders do. This can significantly improve your trading. But does this mean you'll be consistently profitable just with this knowledge? Well, of course not. Because if you don't have a true trading edge to begin with, it doesn't really matter what order type you use, you'll just end up losing money over time. So to make sure you have a trading edge, watch this video we made for you. Just click the video appearing on your screen now.